gold has been very, very good. I do think this year it is likely to not uh, have the same percentage gain, but it will actually do better. So I think the physical bullion market still should continue well. I still said, and I said it when we just got above 2000, that we'll get to 3000 without ever going under 2000 again. I think that's coming. And 3000 is just a round number. There's not any specific reason to take that.
Gold has long been regarded as a symbol of stability and wealth, particularly during economic uncertainty and volatility. As we approach the end of 2024, central banks worldwide remain key gold demand drivers. According to the latest reported data, November marked another strong month for gold purchases, with central banks collectively adding a net 53 tons to global official holdings. Precious metals expert Peter Grandich remains bullish on gold for 2025, predicting it could surpass $3,000 without dropping below $2,000. He attributes gold's gains to massive central bank buying, which has overwhelmed the paper market, and growing concerns over the overvaluation of paper assets, especially U.S. assets. A recent market update reveals that gold has not only outperformed the S&P 500, but has also seen a substantial increase in value this year. While the S&P 500 performed strongly in 2024, gaining over 26% alongside gold, gold's relative performance has surpassed the index. Unlike stocks, which can be more volatile, gold's rise offers a reliable security blanket for investors seeking stability amid uncertainties about where to allocate their capital. Peter believes that while gold might not see the exact percentage gains this year, it could perform even better than other assets. Additionally, he expects bonds to face another challenging year, potentially seeing a 10-year bond yield rise to 5% or higher. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
I do think last year was a unique period. First of all, there was very few people expecting gold to outperform the general stock market, which it did. And of course, it greatly outperformed bonds. And it's done that since 2021. And ironically, that's when I exited the general equity market in favor of gold. So for me, gold has been very, very good. I do think this year it is likely to not uh, have the same percentage gain, but it will actually do better because I think there'll actually be declines by the end of the year in the overall equity market. And I still think bonds are going to have a difficult year, maybe not as difficult as a couple years ago, but I think it's going to be very hard for bonds to turn a positive because I suspect we're going to see a 5% or higher 10-year bond. And the reason I bring that up is interest rates and what other markets do have a direct impact on commodities. Uh, Certain commodities are very sensitive. So if interest rates are going to rally here in the early part of the year, with other main currencies, countries cutting their interest rates, there's not a strong likelihood that the dollar is going to go sharply lower because people are just going to plow money into it because it's a better interest rate payment. So I suspect that will curtail the rise in commodities. Now, I didn't say a decline. Normally, you expect a decline, but I think commodities have such bullish fundamentals, most of them, that while it may not go up as much because of that dollar rise, it's not going to go down a lot. And then as the year progresses and the dollar reaches its peak, then I think commodities will roll into 2026, please God, on a stronger note than they started 2025 with. My feeling, I think people should ask is, when they look of the tremendous gains it had, what really caused that gain? Well, we know really two reasons behind it, and it's not guessing. You can see it because there's proof for it. One is the tremendous amount of central bank buying. It is it has overwhelmed the paper market, and I think that is very, very critical. And the only two reasons that one can assume that those central banks have bought massive, because they're not speculating, they can't churn it and flip it to someone else. There's no one bigger to take it from them, is that they're buying it for two main reasons. One, they recognize that paper assets in general, potentially US assets, could be becoming very overpriced. One of the reasons why several of them have been liquidating a lot of the US assets. But there's going to be a change in the monetary system sometime because of all the world debt that's being created, not just here in the United States. Two, I think it also is because of of the formations, the BRICS. I've been a staunch believer of the BRICS. I'm not rooting for them. It's not in my best interest as an American because they basically are going to be not wanting to deal with America if they don't have to. But I really believe that's going to continue and grow larger and larger. And eventually gold will be used in some form with them in order to trade, whether it's just between themselves, an alternative to the dollar, whatever it may be. We're still probably 1 to 3 years away from that. So I think the physical bullion market still should continue well. I still said, and I said it when we just got above 2000, that we'll get to 3000 without ever going under 2000 again. I think that's coming. And 3000 is just a round number. There's not any specific reason to take that. So the bullion market should work higher.
Hey Peter, really quick.
Uh,
With the BRICS, I know that there's we've been on this Bretton Woods system since like the 40s, and then Nixon took us off of. I was actually watching a documentary on the Watergate scandal. I had to look in that. I've heard about it, but but I never researched it.
Bitcoin, the world's largest cryptocurrency, showcased remarkable growth in 2024, achieving a staggering 120% increase and outperforming most asset classes. However, its meteoric rise began to lose momentum toward the year's close into early 2025. According to a Bloomberg report, Bitcoin experienced its first monthly decline since August 2024, slipping 3.2% in December. This drop came as investors started taking profits after the sustained rally leading up to the inauguration of Donald Trump as the 47th President of the United States on January 20th, 2025. Peter Grandich foresees two key developments that could significantly drive gold prices higher. He highlighted that cryptocurrencies have diverted some potential investment away from gold. However, as the speculative frenzy surrounding the cryptocurrency market subsides, he expects gold to gain increased traction, particularly with robust central bank demand continuing to fuel the market. Now let's redirect our attention to a video.
I think the BRICS will use gold in some form, whether it's just internally on how they trade with themselves, potentially introduce some sort of currency or some type of basket that would include other commodities as well. I think the third chance, or the lesser of the three, is that they're going to introduce a whole new system to, to replace the dollar. I don't think it's in their best interest to do that. But I think that's coming, and that will keep the support for the physical bullion. Now, there's two things that I'm anticipating to happen that in order to get gold much higher, if you want to believe in much higher prices. Crypto cryptocurrencies have been eating the lunch of not as much gold, but the miners and especially the junior market, which I'll talk about in a moment. But it's also prevented some people who would have probably normally bought gold as a hedge, and right now they've tried hedging themselves in cryptocurrencies. I think as that market gets unmasked and people realize how much is being lost in these meme coins, for instance, a really nice guy that I've known for a while, big silver bug, huge daily show comments in valleys or at bottoms and all. But I do think once the cryptocurrency market speculative fever slows or reverses, that will only aid gold. It'll continue to go because there's so much demand from the central banks. But when the public, which last year was almost a net seller of physical bullion, switch and become buyers again, that'll aid it. The miners is a two camp. There's the main big producers, and even within there, there's a few of them that are having their own troubles and others that are doing really, really well. But most of them are just producing, they're almost like printing money with their free cash flow. So I am looking for a banner year of M&A in the metals and mining industry. And one of the main reasons, and again, 98% of people listening to this should not even think about doing it, but I really plowed a lot of money into the junior sector, the smaller explorer types. And the reason I've done that is not only historically are they the most undervalued they've ever been, but at the end of the day, if the don't worry, be happy crowd's right about growth and all the things that we need and EV and all that stuff, the need for new metal discoveries in order to sustain or even grow economies is so acute now. And because these majors are in this printing mode of free cash flow, I suspect that they're going to look to buy things that are already in the ground, selling for 20, 30, $40 an ounce versus spending between $150 to $300 an ounce to do grassroots discoveries. So I think it's going to be the best year in a lot of years, and I put my money where my mouth is with that. But it's the highest of risk categories that one could consider, where most individuals should just focus on physical bullion and a little sprinkling of, major producers or royalty companies. For most people, junior resource stocks have to be treated as a pure gamble.
Gold's remarkable performance in 2024 has solidified its status as a pillar of economic stability and a hedge against market uncertainties. With prices surging over 26%, the metal's appeal resonates with investors looking to safeguard their portfolios amid inflationary pressures and global volatility. As we move into 2025, gold and the S&P 500 are poised for an intriguing contest. Factors such as interest rate policies, geopolitical developments, and evolving inflation narratives will play pivotal roles in shaping their trajectories, ensuring a complex yet captivating financial landscape. With gold's significant gains in 2024, will it continue to outperform other assets in 2025? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.